All right, good morning, everyone. I'd like to call the meeting of the Audit Committee to order, please. Mike, are there any public speakers?
No, there are no public speakers today.
Okay. Let's approve the minutes from July 23rd. May I have a motion? Can I second my own motion?
Yes.
Yes, all right, second. You can't second it.
You made the motion, I'll second it.
Oh, fine.
Can you second it?
All right, fine, okay.
One hand washes the other.
Yeah, all in favor?
We get to the next item, that's all
Yeah,
that matters.
all in favor? All right, okay. Mike, can you take us through the work plan, please?
Sure. There's a couple of changes to the work plan. Security of sensitive data will be presented to committee twice a year, January and July. And we're adding a briefing of the MTA IG office to the July meeting.
We just thought as one of the many components of additional oversight, we thought it'd be useful to add that to it. All right, great, thanks, Mike. Okay. So let me, if you don't mind, just indulge me for a minute. I just want to add a couple of comments. This is my first audit committee meeting. Just a few things. One, I am honored to be doing this role. I knew well my three predecessors, and each were either from Putnam or Dutchess counties, so somehow they like the northern counties. We grow good accountants, I guess. I'm the son of an accountant and the son-in-law of a tax attorney, so maybe that's part of it. They each brought some pretty unique skills and commitment to the work, so I hope I do them and us proud. Second, to the staff, it is noble work you guys do. It is unsung and generally unglamorous work here in the audit world, but it is essential. We provide the validity that the marketplace requires. The paucity of attendance here, and Murray, thank you for showing up, but the emptiness in the back of the room shows the complexity, makes it hard for people to engage in the work we do, but it is noble, and more importantly, it's invaluable. It's invaluable because as you go to public meetings, we've all been to fair hearings this week, the public says how opaque we are. The public says there's no access to information, and I actually think in point of fact it's the exact opposite, that we are highly transparent. We have monthly, we have quarterly, we have annual reporting. It's publicly shared, available to everyone, and it's voluminous, so you do not have a shortage of data to look through. And then we have 4 different sources of oversight. We have your function, we have our compliance function, we have the Inspector General, and we have our external auditor partners. So there is an enormous amount of support and data. And so I think, in fact, transparency, which is how I believe things should run, will continue to be the watchword of this group, but the Audit Committee is, in fact, the source of that transparency. Last, I want to just mention our focus. I think at times it can become unclear what the Audit Committee can focus on, and I just want to read for the record the 3 foci of the Audit Committee from the Charter so everyone has it clear. We monitor and oversee A, the conduct of MTA's financial reporting process, the application of accounting principles, and the engagement of the outside auditors. B, internal controls and risk management. And C, general matters related to legal, regulatory, and ethical compliance. According to typical audit committees for public companies and or governmental entities, these are generally in descending order of time spent. Financial reporting, risk management, and finally, general matters. So I believe as an ingoing expectation that that's how we're going to allocate our time as well. Financial first, risk management second, and general matters of legal, regulatory, and ethical third and last. So that's the comments I just wanted to make. So now we have Mike and your team from Deloitte to discuss the results of the second quarter consolidated financial statements. Mike, the floor for you and your team is yours.
All right, sorry about that. Good morning, Mr. Chair. I also echo your comments in terms of what you look to do from an audit committee standpoint. In addition to being a partner at Deloitte, I also sit on the board of the National Association of State Boards of Accountancy, and our primary focus there is to protect the public interest I will echo that, everything you mentioned, as well as what we do as an external auditor, is to protect the public interest. And I appreciate your thoughts on that and look forward to working with you and your committee in the next year. With me today, to my direct right, is Jill Strohmeyer. She's the managing director on the accounts. She signs the MTA headquarters audit, as well as several of the other agencies. Chris Hickman is a managing director as well. He signs the railroad reports. I have Patricia Zaretta, who is a manager with us, working with Jill and the team, and then Darshan Patel, who heads up the Uniform Grant Guidance, the single audit, is with us today. And Jill will share some information with you as we go through the audit plan. As you mentioned, we have the second quarter report to share with you today. Because that is June 30, and so far in the past, I'm just going to summarize very quickly. It was an unmodified opinion in terms of our review report. We had no misstatements or uncorrected errors that we would need to bring to your attention. There were no changes in accounting policies or principles, and we felt that those financial statements were proper representation of the financial activity at that point in time.
Any questions?
The issues for me are not obviously what is in the report, which I have read and find very illuminating. The problem is we need 16 million copies of this. One to every person who lives in the metropolitan transportation region, okay? That's the problem. Not that we do not have oversight, as the chairman indicated, not that we don't have outside auditors who do a very good job in putting together even something that I can understand, which is very unusual in that context from an auditing standpoint, but that nobody believes it. And that's our problem. And listen, I understand members of the public, they have their own lives. They're not interested in capital versus operating. The problem I see is we have elected officials in this state who do not understand what is in this report, or don't take the time to look at it, or don't take the time to look at it and call up our CFO if they have a question and say, what does this mean? Or call you and say, could you explain to me what this means in that context? That's our problem. And collectively, we have to figure out a better way to accomplish what we need to accomplish, which is to get people to understand. That doesn't mean people will agree with every decision we make. We don't agree with every decision we make. But it means that people need to understand the financial activities that take place and why they take place, and what they mean, not only to MTA, but to them, those who live in the region, those who pay for the system, both either by taking the system or by living in the region, who also pay for the system in that context. So, I think, Mr. Chairman, and that's what we need to try to figure out, is how do we do that? I understand it's on the website, I understand it's in 15 different places, but for whatever reason, nobody looks there. And as I said, while I would love for the people who come to the public hearings to understand, that's probably far-fetched. What I would hope would happen is that those elected officials and appointed officials who are making decisions affecting us would understand. That's the difficulty I see in how we move forward, especially in the next 3 months when decisions are going to be made by some people who live in this region and by some people who don't live in this region and live far away, about the financial ability of this system to transport the millions of people we do every day in a safe and efficient and affordable manner. So that's why I'm here, to try to accomplish that in a more focused manner. It may be one-on-ones, it may be one-on-tens, but at some point, I even think it may be necessary for you and your team to go to Albany and sit with the elected officials up there in both conferences and say, listen, here's what we do, here's how we audit it, here's what the numbers mean. Then they can make informed decisions, which are clearly better than uninformed decisions in that context, and that may be something that we need to accomplish in that regard. And I've said my piece. Thank you, Mr. Chairman.
Very fair. I'm going to have two much more mundane questions, maybe for Mike or for Jill, whoever's appropriate. Can I draw your, realizing this is a little bit of ancient history, can I draw your attention to just a couple of things that'd be useful to hear about? In the balance sheet, we've got a $3 billion increase in debt, and I'm not questioning whether we did increase our debt. Sadly, we do and continue to. I'm trying to understand, though, how you and your audit function go about validating that increase in debt. What's the process by which you go about to validate that?
As we perform the year-end audit, we actually do look to outside external sources to see that, in fact, the debt balances are appropriately reported. We are monitoring the Finance Committee minutes throughout the year to see when you're having debt issuances to make sure that they're reported properly within the quarters. Those are the primary procedures that we do from that perspective.
Good, thank you. And then the second one is on page 19 in our cute little pie charts, which remind me of my consulting work. We talk about the capital assets, and we got 21% on page 19. That's other. Can you just give us a sense of what's in other, maybe the major pieces of other?
I think that I would let Pat handle that question.
Other assets include cash, restricted, unrestricted investments, receivables from state and regional transit taxes. That's the bulk of it. So those three items are the bulk of other. At this point of the year, our receivables are very high because when the state appropriates the taxes, we have to record that as a receivable. So by the end of the year, the receivables are going to come down very small. So you'll see a big blip, especially in June. You'll see it a bit higher in September, but at the end of the year, it's gonna average out. So.
Yeah, I mean, that's always the fun of looking at ancient history, and for us, 6 months is. Thank you. Thanks, Pat. All right, need a motion, a second, to accept the Deloitte review. Second, all in favor? Aye. I've never run a two-person committee. It's very strange. All right, great. It's efficient. Well, it's very efficient, yeah. So what do you think? Great. All right, Mike. Let's continue on the IG's office. We have our Inspector General here, so maybe thirsty ear for what you have to say.
In terms of, again, transparency but I'd say financial oversight of operations of MTA, you do engage us to do agreed-upon procedures of the expenditures and other operations of the Inspector General's office. This is a report we've done for a number of years. Because we're not issuing a separate audit of the financial statements, we're doing what are called agreed-upon procedures under auditing standards. Think of that in terms of we're doing selected audit procedures. So we might be looking at a random sample of expenditures. We would look at travel expenses. We could look at other types of items at your direction. And those agreed-upon procedures are things that you, in essence, tell us you want us to look at. We do those procedures, and unlike an audit, there's really no materiality. We say what we do, and then we report to you any findings that we have. So if, for instance, if we're looking at 15 disbursements and we find one exception of those 15, we have to report that to you. You will find in this report that all the procedures that we did, there were no exceptions to any of the records or any of the procedures that we did. So again, you could view that as a clean report from that perspective, especially when you look at what I mentioned before, no materiality, and it's either a yes, no in terms of the tests that we did from that perspective.
Any questions? Chuck? What's the periodicity of this report? Is this an annual report?
Yes, it is.
Okay. And any thoughts and changes what you want to look at next year? Or is that going to be part of your audit plan for next year?
We can relook at that, Mr. Zuckerman, in terms of whether we would say there are any other procedures we would see based upon work that we do for other clients. But my initial reaction is, at the moment, I don't have any, but we will take that under advisement.
Okay. Thank you. And that wasn't mine was not a leading question that I have a view about that. I wanted to hear your thoughts. Okay, I need a motion on accepting this review.
So moved.
All in favor? Aye. Oh, good, we just changed the dynamics. Chuck, I was seconding all the motions, so, thank you.
No, I had to do that.
We worked it out, don't worry. Okay, let's move to let's do the PCAOB next, yeah? Yeah, okay, so let's, Mike, let's talk about the PCAOB report, if you don't mind.
Okay, sure. Every year, a firm that's registered with the Public Accounting Audit Oversight Advisory Board is subject to inspection. All of the Big Four firms, as well as some of the larger firms, are reviewed every year. They make a selection of audits that occurred in the previous year, and to put it in perspective, you know, we do thousands of audits every year. This past year, we had 55 inspections of different engagements. So that just gives you the type of the sample size that they do. In addition to looking at specific engagements, they also look at the firm's internal controls and compliance and our quality, our ethical procedures, things of that nature, and that's in what's called Part 2 of the report. Part 1 of the report is basically their findings if they see anything that they wish to bring to the public's attention on those 55 engagements. This report that you have here, there were 13 engagements where they had some comments in terms of the things that they would like to see us do differently. I will tell you, of those 13, none of those 13 inspections resulted in any restatement of financial statements or any enforcement actions. So it again is their public oversight of the firm. We stand up very well compared to the rest of our Big Four competitors. But it's, you know, it's a snapshot in time, and it's something that just gives the outside world a view of, you know, their inspection process. So I feel very good about this. I don't think there's ever going to be a situation where you have no exceptions, but I think you also have to look at the trend and the direction of where it's been, and our firm's quality, I think, stands very high from that perspective.
And Mike, I just want to talk about this first, then we can
Sure.
go to the reappointment. Any questions on the PCAOB work? Let me ask a couple. One, I think you've already answered, which is a comparison to the Big Four. Is this, because clearly this is quantitative in nature as opposed to qualitative, and how does it compare quantitatively to your competitors?
Compared to our competitors, we had the least number of comments of anyone else. But again, I think the PCAOB would even say, don't look at that from a perspective of, you know, a quality snapshot. But the other thing I'd mention, Mr. Zuckerman, is your engagement here is not subject to inspection by the PCAOB. This is public registrants. What we do from a quality standpoint as it relates to your types of engagements is we have internal inspections, and a partner or a director is subject to an internal inspection at least once every 3 years. And all of us, Chris, myself, and Jill, have been subject to that process, and we have done very well from that perspective.
And then a related question, with these, even though nothing required a restatement, but there are phrases like deficiency and substantive testing that the inspection team determined. What has Deloitte done, if anything, with these findings? Realizing also there's a private version you get of this same report that provides a little more, I assume, direct language than the public version.
Right. We take this very seriously, and we always monitor not only our own inspection results, but we monitor the inspection results of the other firms. We look for trends. Anytime there's an exception noted by the PCAOB, we do a root cause analysis. We determine whether it relates to a specific partner or a director or an engagement team, or if it's something more widespread within the firm. And I would say over the years, what I have seen is you're seeing more of a standardized audit process in terms of certain accounts. Management estimates, whether it's audits of goodwill, other things of that nature, there's a standardized approach, and then it's then tailored to the specific client's risks and assessments. But we have a national function that monitors those, puts in, again, procedures. And if it is something where a partner individually has done something inappropriately, he or she is subject to a financial penalty. So we do take it seriously.
And just one last one then, was there anything in particular that occurred from this review that triggered any of those moves inside the firm?
When you say this review,
This particular, these 13
right.
deficiencies, did this particularly trigger anything within Deloitte?
There was nothing, I guess positively and negatively, there was nothing new from this review, but, you know, there are things such as, again, looking at management's estimates and the assumptions that are put into those estimates, taking a professional skepticism and making sure that we are challenging and focusing on those assumptions is something we continue to address.
All right, thank you very much for that. Okay, appointment of external auditors, thanks for that. This is the 4th year of our 7-year agreement with Deloitte. Can I have a motion to re-up? All in favor? Aye. Welcome aboard for another year.
They want
Well, they clearly want it. They haven't. They stayed.
Seem to.
All right, Mike. Why don't you brief us on the audit approach for the next year?
Hi, Jill Strohmeyer. I'll
Sorry,
be
Jill,
doing
go
that
ahead, sorry.
today. No problem. So I believe you have our audit plan that was previously distributed, not in the booklet today. So I'll take you through that. Starting on page 3, as Mike had mentioned, is our team members from our partners, managing directors, senior managers, and specialists. I will say our core management team has remained consistent from one year to the next. Each year, we do a risk assessment process. We have an all-hands-on meeting, essentially. All team members are in the room, and we assess risks related to all of the agency's audits here at the MTA. And we again did that process this year, and we determined that we have one significant focus this year, and that's management override of controls. And what that means is we're going to be looking at areas, journal entries that are booked by management to determine whether or not the controls to book those entries work proper and not overridden through the process. We'll do that a number of ways. We'll take all of the journal entries that were booked in the system this year. We will perform some procedures through our technology application tools that we have at Deloitte. We'll be looking for journal entries that have characteristics of fraud, that it may be on the weekend something was posted, or around dollar amounts, or something that was posted on a holiday when typically you wouldn't think a journal entry would be posted. We'll also be having discussions with management. Bob and his team will be talking about fraud and risk with those members of management. We'll also be looking at key estimates and determining whether or not there's any bias in determining the assumptions behind those estimates. On page 6, we'll also be focusing on other areas not considered to be significant areas of focus, but just areas of focus. This year, the authority will be adopting a new GASB standard related to other post-employment benefits, GASB 75. So this team here will be taking a close look at that. We'll be involving some actuarial specialists in the process as well. As we do each year, we'll also focus on capital assets, very large balance on the balance sheet, so we'll be taking a look at additions and disposals of your capital assets. Pension liability, again, very big number, a large estimate. We'll be looking at that from all of your plans, whether sponsored plans or plans that you or plans you have with the state or the city. We will be looking at all of your revenue streams across all of the agencies, ticket, passenger revenues, vehicle toll revenues at the Triborough Bridge and Tunnel Authority. And we'll be focusing on grants, appropriations, and tax revenues. Again, you're getting, receiving quite a bit of funds from city, state sources, so we'll be focusing on that throughout our audit. On page 7, you will see a list of reports that we will plan to issue related to the 2018 year. Very consistent with prior years. The timeline is also very consistent. On page 8, we list some of our specialists. So in addition to the team you have here, we do bring in a number of specialists to help us through our audit procedures related to certain account balances, primarily pensions, other post-employment benefits, We also use information technology specialists to look at key IT systems across all of the agencies. We do certain control work around IT controls as well. And then we also bring in specialists related to your hedging instruments and your derivative instruments. Our timeline is also on page 8, very consistent with prior years. We're currently in the field and have been in the field doing some preliminary planning procedures and testing procedures. We'll be back in the field. The team will be back in the field starting January for Triborough Bridge and Tunnel Authority through the end of April to complete our procedures. On page 9, we talk about innovation. I want to spend just a minute here. Our audit has somewhat changed over the last couple of years, with technology just being a focus I think at every organization, and we're no different. So our audit is now designed to include certain technology tools. We do more data analytics on certain financial statement account balances. We use certain tools that help us facilitate confirmation processes with external parties. That's not a manual process anymore. We're not using the U.S. Postal Service, but using a technology platform in order to facilitate the confirmation process. We also have a tool called Deloitte Connect, which is really just how the agency management teams in Deloitte communicate when we need a schedule or some audit evidence or support. We're communicating through what we call Deloitte Connect, which is a secure tool that allows us to transfer data even more safely than through an email. On page 12, we have included in this report a copy of our latest peer report. Mike had spoke about the PCOB report and mentioned that you are not subject to that inspection, but all private companies, which would include the Metropolitan Transportation Authority, would or could be selected as part of our peer review program, which another accounting firm, in our case Grant & Thornton, comes in every 3 years to review our private company audits and internal controls and procedures. And so within this report, you will find that our latest peer review report dated November 30th, 2017, in which we did receive the highest possible rating of a pass. I will say this engagement was not selected as part of that process, but could have been. And then the last thing I had was just page 17, list out new accounting standards that the authority will be required to adopt this year and in future years. I think I mentioned this before, but the key standard to be issued this year will be GASB 75 on other post-employment benefits, which will essentially align the way that your OPEB benefits are being reported and disclosed to the way the pension are currently being reported and disclosed. So the pension and OPEB liabilities will now be reported in the same manner. And then the other two standards, which have already been adopted through your first quarter and second quarter reports, one related to GASB 85, which is what we call a catch-all statement, kind of a whoops by the GASB, we forgot something in a previous standard. So just kind of some corrections to previously issued standards. And then also GASB 88, which related to certain disclosures related to your debt instruments, where just the disclosures were enhanced. Nothing that had major impacts on your financial statements at this time. But GASB 75 will. It will have an impact to your financial statements. And that's all I had as far as prepared remarks on this year's audit plan. Happy to answer any questions you may have.
Gentlemen?
I have a couple of questions, if I may. I take it from what you have just said that you also do a testing of pension obligations and funding, correct?
We do. We look at
And I assume in the course of that you check on whether or not we have and to what extent we have unfunded pension obligations, correct?
We look at that, yes.
Do you, the Pew report gives us the unfunded obligations of governmental structures such as states and localities, but I haven't ever seen any such comparison as between organizations such as this in terms of peer review. Do you do that kind of testing for us as to whether our unfunded pension obligations are greater than, less than, equal to those of our peers?
We don't do any specific test work in comparing to your peers. I think I've seen reports from management that does an analysis, but we specifically don't compare
And
to
you
your peers.
don't test that in any way?
We test your liability and we use our actuarial specialists, but your liability is really based on assumptions and determined by management in conjunction with your actuary.
The older I get, the more assumptions I hear, but that's a different issue. Does somebody test the unfunded obligations in terms of peer review?
What we do is we have our actuaries go through and look at our future liabilities and our assets that we have to fund those future liabilities. We have a schedule of which we are funding the unfunded liability over time. We are funding, while not required, we are funding what the actuary says should be the appropriate funding level. So for those
Let me be clear, I don't quarrel with the fact that you're doing as much as or better than you have
Yeah.
to. But my question is, in terms of peer review,
I think we had the pension review from our chief investment officer, and if I recall, I think we were right at the average with
if
other.
you could get that to us, I
Yeah.
think that would be important.
I think, if I recall, I think we were just right about at the
I
average.
think last year we were about 75% overall funded, but, you know, we're part of the city plan, and we're also part of Neisler's, the state
But-
plan. So the state plan is 95% funded. The MTA DB plan is about 78% funded. And when you look at a graph of all the states in the U.S., we're probably better than average. So I think we're
So
actually
you're
pretty well
certainly
funded.
better than the state of New Jersey, but that's
And
not saying
Connecticut, where I
much.
live, yeah.
So let me go to a second question, if I may. Do you test revenue?
Yes, we do test revenue.
Thanks to Andy Byford and his attempt to try and get us into the future a little faster, we have now got some statistics as to the degree to which there has been fair evasion. We've had rumors, anecdotal experiences, and the like. And the numbers are quite staggering. And Mr. Byford's efforts to try and deal with that are becoming quite clear. And the question I have is, to what extent, if any, do you and have you in the past tested that kind of information? I must tell you, in the 8 years I've been here, this was the first time I knew that we were talking about $100 million or more in each of the subways and the buses.
So we're testing revenue recorded in the financial statements, which would be anyone who swipes their card at one of the stations or rides the train. And we're doing a lot of procedures related to that. We're actually buying tickets ourselves, and we're swiping them and tracing them to make sure they're recorded properly as revenue, which is quite a process. For revenue that isn't recorded in the
That's
financial
the point.
statements, it wouldn't be subjected to our testing procedures, because under the accounting rules, it wouldn't be recorded because it's not collectible.
And that's where I wanted to go. If I understand what you've just said correctly, absent the kind of inquiring mind that now is in transit, we would not have any kind of definitive understanding based on examining your financial report or even that of the Auditor General as to the extent to which we are losing revenue. Is that correct?
That's correct.
Now, if we are losing revenue in other areas, that too would not necessarily be disclosed by your examinations. Is that correct?
I would say there we are doing procedures, and I actually would go back to one thing that Jill just mentioned. We are looking at understatement of those various items, and we do it to some extent. Let me give you an example. When you used to have the axle monitoring, I can't think of the right terminology right now, but the axle count, we would look at the axle counts from various points in time and compare it to the revenue as it relate to bridges and tunnels. So we would do that type of thing. We also, you know, with the turnstiles, to the extent somebody's actually going through the turnstile, there's turnstile counts that you can compare to some of that. But if somebody's just jumping over that treadle or whatever, there's no way that I can think of from an audit procedure that you would be
But
able
you
to
see,
determine that.
Actually, there is
Let me
one
make the
technique.
point, if I may.
Sorry.
I don't know who it was, but it was a member of the board who observed that maybe the so-called decline in passenger revenue had something to do with evasions that had not before this discovery and documentation by Andy's crew was defined. And so my question takes me to my next step. Do I have the same problem or a similar problem in the railroads, on the bridges?
If I may interject, on the railroads, the Internal Audit Department, we have a spotting services that we do on behalf of Long Island Railroad and Metro North, where we actually buy fares and making sure that the trained person is not in business with us, per se. We give those results to Long Island Railroad and Metro North Management, and they use that information in their calculations that report to you.
So it's easier to discern there.
Well, no, and on the subway side, we do look at gained access. That's where someone who's gained access through the turnstile and have not paid a fare. In addition to that, periodically, we've done it about 5 years ago, but we certainly have it in our 2019 audit plan. We're going to look at fare evasion both on the bus and the subway side. I already had discussions with Neil on this in our first meeting. So I think more on the internal audit side, we address this issue more so that on the external side, as you said, because they can't audit something that's not recorded. But it's certainly a risk to the corporation that we consider. It's a high risk and something that we're going to be monitoring in the future and reporting back to this committee.
And how about on the bridges side?
Bridges side, we also look at that. We look at mismatch reports where perhaps a truck is using a car tag and making sure that the fare is the right fare, because we use, on the bridge side, we have artificial intelligence that records the vehicle going through the toll plaza. So it's called a mismatch report, where we will look and see, did we get the correct fare or any fare from that vehicle, and have they followed up on perhaps no tag in the vehicle.
So is my takeaway from this the following? I hope it is. On the bridges and train side, I have a pretty, and for a few years have had, a pretty good handle on where the revenue is and where it has not been materializing, correct?
Correct.
And that now that we have this new information that's come through Mr. Byford, are we going to be able to use that to expand our knowledge base?
Absolutely, and bear in mind, and the transit side, they always had a process in place. Whether or not it was a robust process is one we called into play. We used statistical sampling to go to all of the stations, both high stations and low stations, because you just can't go to Times Square and look at fare evasion and make an opinion on the whole system, because you'd have a skewed number. But
My issue really is, I think it's important that we are able to say to the public, we're on it, we're looking at it, we're going to keep looking at it, and we appreciate exactly what Mr. Byford and his colleagues have been able to do to point us in that direction. Is that correct?
absolutely, and we're going to increase it, absolutely.
Let me just jump in here. Mike, when are we covering our internal audit plan for 2019?
That will be next month in January.
Okay, so I think we can remand to January a conversation for your NYC transit, what technique you could use. I do imagine some comparison of ridership, which we do track, to revenue. And we do have that historically. That may be a decent comparison, because having a camera sitting at every station is obviously not a feasible technique, but we do have ridership stats
With
we use.
respect, I'm not sure about that, but okay.
Okay, for now. All right, other questions on Jill's presentation? Okay, Jill, I have a couple for you. One, on the significant risk focus area, that you picked management override of controls. A, can you tell us how you arrived at that, and B, what was last year's, please?
So we go through a thorough thought process collectively as a team to determine where a material misstatement could occur within your financial statements. And we also are using professional guidance as well. Management override of controls is a significant risk for, I'll say almost all of our clients. So this is consistent with what we're doing on almost every engagement within the firm. And yes, this was pegged as a significant risk last year as well.
Okay, thank you. Secondly, you mentioned and you showed us a picture, although they're very hard to read, of these new technology tools Deloitte has on pages 9 and 10 with some very fun little names. I would ask that maybe at the next audit committee meeting we have you provide us a bit more, maybe even a demonstration of some of these technology tools, because I think the four of us would be better educated knowing. I don't think we need to understand how your internal email or whatever your Slack version is for internal communication. I don't think we care about that as much as some of the techniques you're using for validating financial statements. So if you wouldn't mind adding that to the agenda, Mike, for Deloitte, that would be appreciated.
Absolutely. We'd love to show you.
Thank you. Okay, great. Oh, yeah, Bob, please go ahead.
I'd like to just ask Pat Kane to talk about a new GASB pronouncement, 87, which is going to be significant and, in fact, a severe call on the resources of this company that I don't think we brought to the, audit committee before. Yeah. And then if we could get comments on it from the auditor. So Pat, set the stage.
Okay. In the accounting world, outside of government industry, there's been a new accounting rule that basically classifies all leases as capital leases, meaning that when you have a lease, you no longer record rental expense. You actually record the value of the asset as if you purchased it. So basically, you're recording an asset and you're recording the liability. So that's a very big change. That change is now going to happen in government accounting. It's going to happen in fiscal year 20, which for us right now would be the first quarter of 20. So we have to convert all of our leases, all of our real estate leases will now have to be capitalized as an asset with the recording liability. It'll change how the accounting's done. All of our equipment leases, our automobile leases, truck leases. So for the MTA, the leases are in the thousands. So it's going to be a major change in our processes, in our accounting. But for government, they actually added one more twist, where the MTA is the lessor. So, for example, at Grand Central, we lease out to Apple Computer, we lease out to various restaurants and stores. So for government accounting only, we now have to record basically we have to record all of the revenue for that for the entire life of the lease. We have to basically record that as a long-term receivable with an offsetting deferred revenue. So that's another, it's going to add to the complication of the work we have to do. So there's a major change that we're working on right now. We've started the process. We have a task force in place. We've even visited the GASB up in Norwalk to petition them to see if we could defer it to the end of 2020, because we're one of the few government agencies that actually reports on a quarterly basis. So the way the GASB is written, we have to comply with this for the first quarter of 2020. So we're waiting to get an answer from the GASB to see if we can defer it to the end of the year, which would buy us an extra 9 months to implement this. So that's a major change that's coming up, and everybody's kind of pretty nervous about it because it's going to be very resource intensive, and with everything that's going on with the cuts in cost, it's going to be difficult. So
Hasn't it been the practice for some years among real estate companies that they have to capitalize leases?
Um,
The REITs, I believe, have done it for years.
Lessors, under the Financial Accounting Standards Board, do have to keep track of those transactions. The difference is the new standard does not impact the commercial entities as extensively as it does under the governmental standards from a standpoint of even for operating leases. You know, there's a capital lease and operating lease. A lessor under a operating lease would not record the transaction, as Pat is mentioning. It is going to happen under the GASB standpoint.
So then, what would happen if, for example, you had a piece of property that you had contracted to sell, but have not yet closed on? What do you have to do with that?
If it's a true sale, that is not something that is affected by this. But
It's
if
not
you're,
affected by
if you're
that.
under a lease arrangement, yes, it would be.
I guess the point I'm trying to make is we are talking about small leases. We're talking about at some level, you could
you have-
theoretically talk about copiers.
Do you have to
Copiers in a
baseline-
company like ours that we have to, pardon?
Do you have to is there a baseline of any kind, for example, if you have a coffee shop located on a platform?
Well, again, Chuck, you're thinking real estate and you're talking bigger things
Yes,
that are
I am.
that are easier for us to do. We're talking about potentially things as small as a copy machine that we have a lease on. And so what we're trying to do is figure out, is there a materiality standard? Is there something that we can operate under? But the first thing we have to do is we have to have an inventory of all those leases. And we're talking about leases that are at each of the agencies. We're talking about leases. So I think Pat, Noemi have done a great job of kind of getting everybody together to try to gather this information. Our real concern is this is something that, frankly, we are being held to a higher standard than the corporate world because, again, we're having to record on the lessor side as well as the lessee side. And because we're at the forefront of municipal disclosure in that we do quarterly financial statements, the way the GASB is written, it's the first time we report in 2020, we have to have this ready. Well, most have a year-end report. But because we have a quarterly report, we are going to be one of the first to have to do this. There is not software out there. There is not software out there that can help us manage this. So, we're struggling with the PeopleSoft folks. We're struggling with the Yardi folks where we have some database to try to see what we can do to comply. So, as Pat Kane mentioned, we went up to GASB and said we are unique. We are putting a lot of resources into this, company-wide, at the agencies, a lot of resources in. But we are being held to a tighter standard because we are more transparent and do quarterly statements. What Pat mentioned is we are in a constrained resource environment. Perhaps we will have fewer people working at this company as we go forward because the chairman has put a strong hiring freeze in place, which is important because we are under these. There may be other things that happen, but I'm just saying at a time where we really, are trying to keep our record, we always try to keep good books and records, but at a time when we're trying to keep our costs low, we're getting hit with this new accounting standard, which is probably one of the biggest ones that have hit in years. And so we just wanted to make sure that you were aware of it, and we are going to do whatever we need to do to comply.
So let me just clarify, because this is the topic you're raising feels more of a finance committee issue, because the finance committee has to actually help you put in place your material tracking systems. Our role is to validate whether you've done that or not.
Yeah, and because it's got to go into our financial statements,
Right.
which hasn't happened before. And so, again, whether we do it correctly or we do it incorrectly, or one of the things we have talked with our auditors about is we make our if we don't get some type of exemption or, accommodation from GASB, we will do everything we can to comply by first quarter of 2020, but we may not be able to do it completely because it's massive. And so we have talked, what does it mean and what would their report look like for us? And what does that mean? So we're talking to rating agencies, so again, I mention it because we're going to do everything we can to comply by 2020 first quarter if we have to, but it may be something where we are not in full compliance at that time.
Yeah, so a couple, Bob A., do you need anything from us or myself from Audit to GASB to help support the cause?
Well, we believe that GASB is meeting, I don't know if it's this week or they are meeting at this time, kind of this
Yeah, I
period.
know they met in November, I think November 20th, so I think there's subsequent meetings. We didn't get a final answer yet, so we're still waiting. I don't know the exact date.
So really what I'm doing at this time is I want to make sure you are on notice as what the challenge is before us, and we are really going to do everything we can, and I think we've had full cooperation from each of the agencies and headquarters to do it. We're working closely with Deloitte, but this is a massive change.
My second question is for Deloitte. Do you have the ability to test against this level of changes in leases?
Yes, we do. We have had people actually at the GASB when the standard was originally being vetted and put through the process. There's a partner now with our firm who was a GASB fellow that is a resource. We've had him here working with Bob and his team. We've done several presentations not only to the finance group but also to your real estate and your purchasing group, because these individuals need to know as they're negotiating new transactions what these new rules are. As Bob mentioned, it's a massive undertaking. We're telling our clients, both commercially and governmentally, it's a 2-year process to get all this put in place. And just given the complexity that you have, I'd say you're at the most complex standpoint from that perspective. I know the chair of GASB. I also know the chair of the research group. I have talked to them individually. As they've mentioned, they are meeting, they're talking about this. The one potential hope is they plan to issue an implementation guide. And that's a way where they could modify this effective date to be for fiscal years after that certain time versus reporting periods. That to me seems like a simple fix. Whether they do it or not, I can't tell you.
Chuck?
Just want to be sure that your files as our outside auditors reflect that we have indicated that we're doing what we can based on what is the rule today, and that nonetheless it is not clear that we can meet that deadline, so that nobody at the last moment says, you didn't tell us. So I'd like to see that recorded.
Well, and Mr. Mortler, one way that also can be addressed, I have not talked to Bob or Pat about this, but you know, in your financial statement footnotes, you talk about new accounting standards, you talk about what the potential impact is, and I would suggest that we all huddle and think about what we're going to say in this December 31st financial statement about that. That'll alert the reader.
Real risk. Meaningful risk. All right, great. We have a last item to cover before we break, which is our annual Audit Committee activity report, which is shared electronically, which covers the activities of the committee over the last year. Any questions on that? Comments? Okay, can I have a motion to adopt it and submit it to the Water Board?
Second.
All in favor? Aye. All right, great. Motion to adjourn?
So moved.
Second? All right. Yeah, everyone wants to go. All right, thank you.
You are much more adept being an early riser. But could you avoid a